Good morning, this is Mayor Valensky with Driving Markets. Let's just catch up. So yesterday, mid-morning, when the markets were all up, the overnight futures were up, Europe was up, UK was up. I did say, I went on to Instagram and I said categorically that the markets will end up being down simply because they can't hold on to the gains. The major concerns again and again are saying are inflation and interest rates. Look at the 10-year Treasury. The 10-year Treasury jumped 14 points yesterday from 2.68% mid-morning to close at 2.82%. It's looking to go for the 3% level. That is a multi-year high. Also in German bonds, European bonds, all are multi-year highs. UK sterling, UK gilts are at multi-year highs. Even Japan, which has had the lowest yields for the last 30 years, is now at multi-year highs, indicating that interest rates around the world are going to go up. Also, Christine Lagarde of the ECB did not raise interest rates yesterday in Europe. On the back of what? She's got concerns with the impact of the geopolitical crisis with Russia invading Ukraine, and she's holding off on raising interest rates. Big mistake. She should be raising interest rates now in order to combat inflation. Furthermore, she's also said that it's unlikely to be raising rates in the future, so the euro looks like a sell, simply because there doesn't look like there's going to be any increase in interest rates in the coming months. However, in Europe, you've got the fear of stagflation, which is increasing inflation in a stagnating economy. If you have stagflation, that is a very bad sign for European markets. So therefore, it is likely that the DAX, the leader there, and the other countries will follow suit and go south, go down as a result of that fear. Also, you look at the US yesterday. US had the highest retail sales number. It's what consumers are buying. It's what the Joe public goes out and buys goods. The highest number in 40 years. So you've got the highest, you've got high producer price index. You've got high CPI this week, which is consumer price index. And that's inflation on the retail side. You've got high inflation on the production side. And now you've got all-time high retail sales. You put all that together and inflation is not going to stay at 8.5% in the States or at 7% in the UK. It's going to go much higher. In fact, inflation already is running at the 18% level. In my opinion, it's just the measure of inflation is limited and therefore it's not giving you the complete picture. Let's now look at some shares. Look at the stock market. As I said earlier in the week, I said on Monday, it looks like Elon Musk will be getting more active in Twitter. And he stepped down from the board, or wasn't accepted to the board, whatever went on there. And now he's made a private $43 billion bid for Twitter to take it private. In other words, he wants his own social media platform that he can use on behalf of Elon Musk or Tesla or whatever organization he wants to set up, whichever company. As I said, he is going to be the leader in social media. Keep an eye on Twitter. Yesterday, the Nasdaq, all the shares, Google, Salesforce, Tesla, Amazon, all fell between 2 and 3% on the back of fear of higher interest rates. Okay, so there is going to be a breakout at some stage, but the market is stuck range bound on the Dow between 32,500 and 35,000, and the Nasdaq between 13,800 to 15,200. However, there is going to be a breakout at some stage. Keep an eye on it, purely due to inflation and interest rates. Look at FX. Let's look at the Forex market. The dollar is strong. The dollar is only going to get stronger on the back of very high burning numbers coming out from inflation, interest rates, retail sales, producer price index. The dollar's strength is pushing down other currencies. However, look at the UK GBP, which is a big fan of, I keep saying to you, against other currencies, whether it's the Aussie dollar, whether it's the Japanese yen especially, or the euro. You should be going long, in my opinion, of GBP, of the pound. Cryptos took a hammering yesterday and went south again, purely because investors are taking money off the table, off those riskier assets and those riskier investments, and moving into something more safe. And at the moment, Bitcoin is no exchange for anything but risk. It's a high risk asset. All cryptos are high risk assets. Most people lose money because they're getting involved at the wrong level, and Bitcoin longer term is likely to go well above 100,000, but shorter term it's going to be impacted by foreign exchange markets. If you're day trading, be very, very careful. It's a tough market to day trade. You should be looking to swing trade, whether it's a 3-day or 3-week movement. Have enough money in your account to ride out the storm. Be aware of that. You can catch me on Instagram, catch me on LinkedIn, catch me on WhatsApp. You can message me. More than happy to help, guide you, direct you where you need to go to open up an account, etc., etc. This is Meir Walensky on Driving Markets. Have a good day. Have a good Friday. Have a happy Passover. Speak to you soon.